Hello, all. Welcome to Anteambulo. Very excited today because we are recording first ever episode of Anteambulo, and I'm delighted to have Kausthub Keshava as a guest on the first episode. Kausthub is a very dear friend of mine. I've known him for like 6, 7 years now, and he's truly an inspiration. I've seen him grow over time, right? That is why I wanted to have this conversation with him. Looking forward to many more conversations with you, Kausthub. But let's begin the first one. Please introduce yourself for our viewers.
Yes, thank you, Lalit, for inviting me on your podcast. I'm excited to be here. So, my name is Kausthub Keshava. I am currently an associate in the model risk management team at Deloitte USI. Prior to this, I did my master's in mathematics from ISER Mohali, and I've known you for quite some time. Yeah, other than my professional career, I enjoy Formula One racing a lot. I play tennis. I like reading and brainstorming various ideas. Yes, that's about me. Looking forward to the episode.
Perfect. So let's jump right in. So the first thing that we want to understand is let's discuss about the area of work, right? So go in detail about what is it that you work on, what are some of the things that you come across on a daily basis, right? And explain to our viewers to some degree what are some of the prerequisites that one needs to know in order to understand this area. Just set some context.
So the area of work that I am engaged in, like the name suggests, is risk management of models. And these models are used for a variety of risk across a spectrum that mainly regulated banks or investment firms face, such as a credit risk or market risk or operational risk. So these are different categories of risk that most big banks face on a day-to-day basis. And what my work deals with is the development and validation of the models that these firms use. So a simple example is a bank which has a loan book of maybe 40, 50,000 loans. And what we do is we jump into those loan books and assess the particular risk associated. Maybe there's a certain section of the loans that might default. So we try to figure out a model. We calibrate a model to understand how to capture the risk in that loan book. Then we work with the bank to bring in appropriate controls so that they set aside certain amount of capital. So this is just one crude example. Banks and investment firms use models to do a lot of things. And as risk consultants, we help them in either developing those models or validating the appropriateness of those models. And on a day-to-day basis, what I see is a lot of risk, which is say interest rate risk, or say a bank's trading book might be exposed to changes in interest rates in a particular geography. So how do we capture that risk in a model? How do we automate the process of making financial decisions, of changing the trades that they have so that their exposure to a certain risk is controlled? So that's primarily what I see on a day-to-day basis. Coming to say the prerequisites to really getting in this line of work is some knowledge of mathematics and statistics, especially in the probability domain, since that is what most of these models deal with. They leverage a lot of stat concepts. Programming is involved, and an affinity towards, say, just the financial world, how derivatives work, how most financial securities that are traded a lot, how do they work, and just a general interest towards finance is what would be needed.
Great, great. So mathematical maturity and some financial interest is the key here. Let's move on to your journey, right? Like I want to understand where did you start because both of us we studied science, but then from there on, what was the path? What was your trade? And that is something that I want to understand. Talk us through some of the interesting milestones or detours that you had to take during your journey. So
Sure, yeah. You're right. We did start together in science. That was exciting. And then a natural progression for me was to move on to more of science, which is why I took up the basic science courses at ISER. And during that program, I did a few internships in probability models and in simulation techniques. And all of these internships were exciting, right? I learned a lot, like getting hands-on with Monte Carlo simulations, and we are doing all that coding cool stuff that I learned. So that was exciting. But then the point that I can pick out where I started getting interested in the domain of risk management was during a course on measure theory that I took up in my second year of college, where there was a mention of the coherent measures, the notion of coherent measures. And yeah, keep in mind, this is something that's very abstract. This is something that, pure math people get their hands dirty with. They love abstracting notions, generalizing concepts. So this was something that was very generalized. But then what did turn my head was a mention of how coherent measures is used in the calculation of risk metrics for a portfolio. Now that really got a fire started in me. I wanted to explore what exactly they mean by it. That how could something so abstract be used to carry out a tangible financial decision, such as measuring the risk in a portfolio. So I spoke to more people. I connected with professors, with people working in the industry to see, is this something that's actually used? And then I did learn about coherent risk measures and then value at risk and expected shortfall and all these, subset of the abstract notion of measures, right? So that got me to read more about calculating risk of portfolios. How do you assess a portfolio's risk? What do you do with that information? So as I started reading more and more about this, I wanted to get some more formal training in this, which is why I ended up taking a certification exam in financial risk management alongside my coursework. And I did try to pick out my internships in a way that would involve working with financial data sets and something to do with more programming, handling large data sets. And I tried to pick out internships in this area. I did work on a thesis which involved optimization, and that really helped me concretize my say in the world of risk management, which is what finally led me to pick up a role in the risk management space.
So you mentioned that one single event, which is reading the line of coherence measure theory, led you to choose this field. That is what we are trying to identify. What's your detour, right? And really exciting that we could figure out that one point. We'll study that in detail over the future conversations. But now I want to understand, how does a career ladder look in your case, right? Like, talk us through the possibilities from here on. What do you see? What is the growth potential? What are some of the exciting things that you get to work on from here on?
Right, sure. Yeah, since I am part of the so-called corporate world right now, the career ladder is pretty steep. There are lots of steps to move on from associate to senior consultant to managers and all of that. But then what I look at in and when it comes to the aspect of a ladder is what I get to do. Right. Like right now as a associate, I'm working as part of a team. We are validating models that are used by banks for risk processes, right? But then as I go higher up my career ladder, I see myself being more in control of defining a whole risk management process, right? Overhauling a particular investment firm's risk management inventory, or say even coming up with something that's more novel, coming up with a novel technique for assessing a certain kind of risk, such as climate risk, which is something that's in a very, very nascent stage. So a career ladder for me would be to reaching the next step at least would be to develop certain frameworks to assess risks that's not been done before, and to also come up with more robust risk techniques. So that's where I see my career ladder going, rather than just working with models that are already in existence and aligning the goals of assessing a model to pre-existing regulations, right? Things that are already defined. The environment is set, the risk ecosystem is well defined now. But what I want to see myself doing is redefining it to make it more robust.
Very exciting. That's a great problem to solve. The next thing I want to talk about is, this is an insight that I found, which is anyone who is earning any amount of money is in a way generating value and also is generating some amount of trust. So if you can create value and trust together, you end up generating wealth, right? So I want to understand, like, what are some of the sources of accountability that you see around you in your day-to-day life, or some anecdotes of how you incorporate accountability, these feedback loops that generate trust within your own life, or you see something around you.
Right, right. Sure. Yeah. So in my particular position, I do see a lot of stakeholders I feel that I'm accountable to. One is, of course, since the nature of consulting is such that you take on clients, you work directly with them. So there's accountability to the client directly, right? Since the work I do is delivered to them directly. And of course, there's also accountability to the team that I work in at Deloitte, the management here, right? Since they're the ones who bring in projects, they're the ones who decide the clients that we take on. So there's accountability in my work that I do, since that does impact the future prospects of the work that they would bring in. So I do see accountability here, since the work that I do does have an impact on the way the client would go about as allocating capital or deciding where to cut expenses. There are tangible decisions made based on the work that I do. So I see that I am accountable for the work that I deliver to them. But also sometimes when I do go through a few models that, enforce decisions such as whether to lend out loans or whether to, decide on pre-calling a particular bond or something that actually has an impact on the civilians or the retail investors or something that really reaches the common man, right? Some models do have such nuanced issues there. So there I feel some sense of accountability, some sense of distant accountability to the far-reaching consequences of these models, which is what makes me want to be more prompt, more diligent in the work that I do, so that the sort of cascading effect is not negative.
Industry. That brings us to the end of the first ever episode of Anteambulo. I would like to thank Kausthub. Thank you, Kausthub, for
Thank you, Lalit.
making it a grand opening. Look forward to many such conversations with you. Thank you.
Likewise. Thank you.